Welcome to our podcast series, Further the Frontiers, brought to you by Digital Frontiers Institute. My name is Sarah Corley, Deputy Director at DFI, and I'm your host for today's podcast on remittances. Today we explore the impact of COVID, the shift to digitisation, and in particular, how far we've progressed towards the SDG target of no remittance corridors with an average sending costs above 3%. I'm delighted to be joined today by Xavier Martin, a colleague here at DFI. Xavier has more than 15 years of experience in financial inclusion and holds an undergraduate degrees in economics and industrial psychology and an MA from the Johns Hopkins University School of Advanced International Studies. Welcome, Xavier.
Hello, Sarah. I'm happy to join you today. I'm looking forward to a great conversation on remittances and the important role that international migrants play in the global economy.
The money that international migrants send back home on a regular basis serves as an important source of income for millions of households around the world. More than $700 billion were sent in the form of international remittances last year, a year defined by the COVID-19 pandemic and its economic consequences. Remittance inflows are larger than foreign direct investment or development assistance for many countries and represent a large percentage of the national GDP. So considering this, one of the things that surprises me is that the global volume of remittances sent in 2020 was not very different in 2019, despite the fact that 1 year ago, most predictions were anticipating the largest recorded decrease in remittances history. The World Bank even predicted a decrease of 20%, but we haven't seen this. So, Xavier, what are your views on this? Were you surprised by the fact that remittances have been so resilient?
Well, it's always easier to make predictions when things already have happened. Recognizing this, I will say that analyzing the situation now, there were probably some circumstances that could make us a little bit less pessimistic about the capacity of migrants to send money home, even in difficult times. The most obvious precedent would be the financial crisis of 2008, which had a serious impact on the economies of a lot of the countries where remittances originate. Many international migrants lost jobs, but after the crisis, global remittances decreased only slightly, less than 5%. And this time, governments in many countries where remittances originate have been much more involved in terms of offering stimulus and social protections. This, together with the resilience that international migrants have shown in adapting to new job markets, could explain a lot about what we have seen. A second reflection is related to the quality and comparability of the data on remittances itself. Data from remittances comes from the balance of payments of receiving countries from central banks. So there have been efforts to standardize how we define remittances, but there is still not a complete consensus on how to measure and report data on remittances. For example, a Salvadoran migrant in New York sending her mother $300 each month fits with the general concept that we usually have for remittances. But of course, we can imagine lots of reasons for low-value person-to-person cross-border transfers, and it's not always as easy to classify them as remittances. What if instead of $300 she sends a new smartphone to keep her closer to her grandchildren? Will it be considered a remittance? Or what if the $300 are actually to pay back an informal loan taken to buy a plane ticket? What if it's a donation for a church or a community organization? Or maybe she's paying for some products that she plans to sell at her store in New York. There are so many possible situations and definitions, and not every country uses the same ones. This is something we always have to keep in mind when we are trying to draw conclusions from remittance data. Finally, we have to remember that remittances often involve two currencies, the one from the country where the transfer is sent and the one where the money is received. Exchange rates between these two currencies fluctuate, so any meaningful comparison among remittance trends need to factor in these fluctuations.
Aside from the potential decrease in the volume of remittances sent, there was a more optimistic view based on the idea that COVID prevention measures could bring a significant increase in digital payment solutions, which eventually could translate into lower costs for remittance senders. We have seen this in the case of G2P payments. Many governments have made a large effort to digitize their processes and distribute their subsidies. How fast is the shift to digitalization happening in remittances?
There is no doubt that the internet and the rapid uptake of smartphones offer a fresh opportunity to digitize remittance origination, but the truth is that today the share of digital originated remittances is still relatively small. Even with all the distancing measures and campaigns for using digital payment methods that we have seen with COVID, Asian transfers remain the preferred method of sending remittances, by far. In the case of Western Union, digital transfer went from 15% of operations at the end of 2019 to 20% this last year. This is a huge and fast growth, but it's still interesting to see that 80% of customers are still sending in cash. And we see something similar in the receiving end. Even in countries like El Salvador, where the principal Asian network consists of bank branches, more remittances are received in cash.
Given how much cash is still involved, it seems that this may mean that the cost of remittances is still likely to be high. How far off are we in achieving the SDG goal of no remittance corridor being above 3%?
Well, right now the main barrier to lowering costs seems to be the volume of remittances that are still sent in cash, so the preference of migrants of using cash. This increases costs because in order to send in cash, you have to have and pay a network of agents in both sending and receiving countries. These networks are still sending most transfers even with COVID. As of the end of 2020, the global average cost of remittances had fallen to 6.5, down from more than 9% that we have in 2011, but it is still far from the 2030 Sustainable Development Goals. Although I should say that the cost of sending $200 is not the same as the cost of sending $500. Usually, when these studies are undertaken, they use $200 as the amount to determine average cost, but that cost will vary a lot in real life, depending on how much is being sent. The price also changes based on the channel. Sending through a bank branch is usually the most expensive, and sending through a physical money transfer agent is usually cheaper. Of course, the cheapest on average will generally be online transfer because this channel takes the Asian and Asian commission out of the picture. Competition is one of the factors that most helps to drive down the price of remittances. And logically, in corridors that see a higher volume of transfers, we also see more actors interested in offering remittances services. In the most competitive remittance corridors, it's common to find an option for sending a remittance of $200 at a cost of less than 3%. Many times with a small fee in the form of an applied exchange rate difference rather than a commission. In highly competitive markets, you will find companies offering a lot of promotions and incentives, sometimes losing money on transfers in order to gain customers.
Xavier, for some time now, there's been an intense speculation over the potential impact of Bitcoin and blockchain technology on the remittance industry. We've frequently seen attention-grabbing headlines about how Bitcoin will soon revolutionize the field, becoming a global alternative platform to the banks for remittance settlement. But are Bitcoin and blockchain really disrupting the remittance market?
Well, Bitcoin can be used to send money through the internet without the necessity of a trusted third party, so without the banks and without the money transfer companies. Obviously, this is new and it's revolutionary, but in order for Bitcoin to really improve the remittance process, it can be more expensive than existing money transfer methods. It should be fast and it should offer a client-friendly experience. So let's look at it. What are the costs involved in sending Bitcoins? Well, you have the exchange cost of buying and selling Bitcoins. This often involves the user paying for the services of a Bitcoin exchange. Then you have what will be the normal bank transfer fees if you choose to exchange Bitcoin for local currency. And then finally you have the Bitcoin transaction fee, which has actually gone up quite a lot in recent times. So if Bitcoin is cheaper, it's probably going to depend a lot on the specific circumstances of the corridor, but it will probably not be the cheapest in most corridors. In part, this is because a lot of the costs involved in remittances don't really come from transferring the funds. They are related to KYC, AML, customer acquisition, and agent commissions. So that in terms of cost, what about speed? Is it faster? Well, instant remittance transfers are more and more available in many corridors, especially from cash-to-cash remittance products. Can Bitcoin beat these times? Well, a Bitcoin transaction can be confirmed in as little as 10 minutes, but we also have to add the time it takes to move money on the sender side, from bank account to the Bitcoin wallet, and on the recipient side, from the Bitcoin wallet to a bank account. So, to be realistic, we might be taking about 2 or 3 days for the entire transaction. And what about the customer experience? Is Bitcoin more customer friendly? This is a question for remittance senders, but we know that getting into Bitcoin takes some work. You have wallets, private keys, exchanges, transaction confirmations, fees, volatility. That may be a somewhat complex customer experience to compete with the existing remittance apps, which deliver very good experiences. All in all, it seems that remittance senders are looking for speed, convenience, and value, so Bitcoin will have to compete on those terms.
Thanks so much, Xavier, for updating us on the current trends and issues in remittances. For those listening, what would you say are the actions or key takeaways for them?
Well, I will really emphasize the resilience of international migrants in sending remittance transfers. It certainly upset expectations. And then I will say that I think it's a noble cause try to make remittance as cheap as possible, but to do that I think it's going to be necessary to consider that the factors that explain cost may not necessarily be technological. Bitcoin, as a technology, doesn't solve problems related to core challenges of the remittance business. The challenge in remittances is the last mile. How do I get money in the person's hand and meet all the regulatory compliance requirements in that country? Moving money from point A to point B isn't hard. The last mile is what is really hard. And that's what probably explains why blockchain is not necessarily making a big impact on the cost of remittances and why the shift to digital alternatives is taking much longer than in other industries.
Thank you so much, Xavier, for updating us on where things are in the world of remittances. It's been a really interesting discussion with you today, and I appreciate your time. And I also just want to say a big thank you to everyone listening. I hope you've enjoyed today's session, and I hope you listen to more podcasts and join us on some webinars again soon. Thanks, everybody. Bye bye.